of Bitcoin. Every single Bitcoiner, every one of us, regardless of if you mine Bitcoin or not, the decisions miners make or the stakeholders of Bitcoin mining are so connected to the livelihood of all Bitcoiners. So now we're going to welcome a group of industry experts in Bitcoin mining to talk about the decentralization and centralization in Bitcoin mining. More specifically, they're going to dive into the opportunities, threats, strengths, and weaknesses of proxy pools, and think about our proxy pools a threat to Bitcoin and how can we keep Bitcoin mining decentralized, more decentralized than ever. Let's welcome our next group of guests, Emzy, Mark, Kent, and Bob. We have a new guest joining us in the panel, and then let's give them a warm welcome.
Okay, Pierre, you're here. Okay, we have today Pierre, Mark, and Kent, and Bob. He's sadly not on the slide. And we want to talk about mining decentralization. And first of all, I would like that everyone introduces themselves and say what they are doing in helping the decentralization of mining. We start with Mark.
Hello everyone, my name is Mark Artymko. I'm the co-founder and president of Ocean. Ocean is a Bitcoin mining pool. We launched in November of 2023, and we're almost at our 1-year anniversary, so this is an exciting time for us. Ocean is actually a relaunch of one of the earliest mining pools in Bitcoin, which was Eligius, that was created by my colleague Luke Daster, the legendary Bitcoin developer, and Eligius ran from 2011 until 2017. So Luke and I started Ocean as the company, and in 2023 with the primary goal of bringing to market a solution that would help to decentralize Bitcoin mining at the pool level. There's many different aspects of mining. There's hardware, there's pools, there's the actual manufacturing, there's the hashing, and all of them have different elements of centralization. But at the pool level specifically, the aggregation of the hash rate by several pool operators creates some pretty serious risks as far as we're concerned. So we wanted to address that by giving the control of the block template construction back to the miners, so out of the hands of the pool and back to the miners, to allow miners to be sovereign, the sovereign decision makers of Bitcoin. So we're happy to say that we launched Datum, the pool. The pool was launched in November. Datum, the protocol, was launched at the end of September this year. So we're just a couple of months in, and we have tremendous adoption. And right now, about 70% of the hash rate on the pool is sending their hash rate to templates that they designed on their own facilities with their own preferences in place. So decentralization is alive and working today.
Okay, Kent?
Yeah, my name's Kent. I'm the co-founder and CEO of SAS Mining. We offer mining as a service to the public, and so what that means is clients are able to purchase mining hardware, have it hosted in one of our 3 data centers in Wisconsin, Paraguay, and Norway, and they're able to receive the Bitcoin rewards that their mining rigs produce. They pay service fees for it, but in this process, they're able to collect wild sats directly from the Bitcoin protocol, and at the same time, begin to dollar cost average into their Bitcoin positions outside of the traditional KYC exchanges. Now, how we are decentralizing mining is through bringing more ownership into the mining ecosystem. So more owners means distributed, decentralized hash rate. And then the other thing is, the other way that we are really bringing decentralization into mining is through diversifying the incentive set. This may be somewhat surprising, but from my vantage point, I've seen a lot of miners are actually mining not just for Bitcoin, but because they're looking to increase their fiat returns. And so as a result, by bringing people in that are looking to stack fiat or stack Bitcoin, not fiat, we actually decentralize the incentives by which people are mining.
Okay, Pierre.
Testing, testing. Okay, hi, my name is Pierre Rochard. I'm the Vice President of Research at Riot Platforms. We're a publicly traded company, and we've got several sites now. We have a site close to Austin. It's about 400 megawatts. And we're developing a second site close to Dallas with a capacity of 1 gigawatt. And we also just acquired operations in Kentucky, and we're expanding there. Our interest is to centralize Bitcoin mining, right? We're trying to be the first to get to 100 exahash, and that's the race we're on, and we've got lots of competition on that. So at the end of the day, it'll be decentralized, right? So, yeah, that's it.
Hi, my name is Bob McElrath. I weaseled my way onto this panel at the last minute. My background is I worked for a couple companies. One is SolidX. They were the first guys to propose a Bitcoin ETF in competition with Winklevoss brothers. I also worked for Fidelity Investments. I ran the mining operation at Fidelity. I was also the wallet architect for the Fidelity Digital Assets service, which is now the back end of the Fidelity Bitcoin ETF. Since then, I've been consulting. I currently am an advisor to Satoshi Energy. They broker contracts, power contracts for miners, mostly in Texas. They've closed about 0.5 gigawatt in deals and about 2 gigawatts in their pipeline. This is a complex thing. If you need help making power contracts, talk to these guys. And I have to announce today that my project is Braid Pool. It's a fully decentralized mining pool. And I'm happy to announce for the first time on this stage that I just signed a grant yesterday from Spiral to work full-time on this. We have 2 full-time developers now. And hopefully sometime early next year, we'll have a fully decentralized mining pool we'll be able to offer you guys and test.
Thanks. Okay, I want to explain a little bit how we ended up here. So this panel inspired a little bit my concern about mining centralization. So if you look at the distribution of which pools, well, you need to precisely say who is deciding what's in the block, which is called like the block template. So if you look at that, you see there are a few big pools and there are a lot of small ones. And additionally, I want to directly go into that topic because at the beginning of the year, we learned that there's actually some pools who work together, who you can call it like a proxy pool. So actually, it's not different pools. The pools have the same block template, which ends up some party, or they together decide what's in the block. Together is maybe the wrong word, because it seems more that there's some entity, and actually it looks like different pools, and but it's actually one. And the size is roughly like 30-35%, which are not really shown because they operate as different pools, but actually they have the same custodian and they have the same block template, and that's public information. You can look that up. That's visible also in the Bitcoin blockchain. So yeah, my question is that actually a concern, or what would be the optimal way to address this? Maybe Mark first?
Yeah, sure. But first off, I just wanted to ask, hands up if you've ever heard of the term block template before. All right, cool. So I think there's a lot of focus on the pie chart, the ugly pie chart of the major pools and the aggregation, and people like myself are up here saying that that's a problem and centralization is an issue. But to really understand what's going on is really to realize that the mining process is composed of intelligent parts of mining and brute force parts of mining. And this is always the way since the beginning. In the early days of mining, every decision about what to put in the blockchain was made by the miner, because that miner ran a full node. That miner built their own local mempool. They selected which transactions to put in the blockchain, and then they provided the hash power to the block. If they found a block, they would report it up to the network and they would peer. And with the movement and the shift towards the mining pools, the brute force hashing was left with the miner, but all of those decisions were transferred over to the pool. So you have a scenario where you have two large pools, you have Foundry and you have Ampool with more than 51% of the hash rate. That means over 51% of all the mining hash power in the world is working off of a set of blueprints given to them by two companies. And that is basically a situation that is ripe for censorship. The risk is there. If Bitcoin is to be censorship resistant, we kind of need to be in a situation where no single entity is controlling what goes into the chain. So I think all of the efforts, like all of the decentralization efforts out there, and there's a lot of good projects, they're all aiming to basically take that one component of who is responsible for picking the transactions that go into the block and making sure that that's distributed across many, many different companies or many, many different individuals, so that the thought of censorship just becomes laughable. Like if in a world where we had hundreds or thousands of different entities constructing their blocks, if a government entity wanted to censor a particular group of people or a country or sanction a country or cut them out of Bitcoin altogether, they would have to literally go to hundreds or thousands of different people who are making those blocks and basically tell them or threaten them to exclude or censor certain transactions. Today, they only have to go to two companies. So Bitcoin is a decentralized money. It's the best cryptocurrency in the world, yet we're relying on two companies to be good actors. And so that's just not a safe state to be in. So I think, yeah, that's where we gotta go.
I would like to ask Pierre if he say, are you choosing your block template yourself, or you're saying it's good enough that you always have the option to switch pools? Is that good enough? Or?
Yeah, I mean, I think that it's FUD, right? It's fear, uncertainty, and doubt. It's concern trolling. It's like if I came up here and said, hey, look, 100% of the hash rate of the block templates are being created on planet Earth. I'm starting a new pool on the moon. So if you're not using my pool on the moon, you are anti-Bitcoin, and Bitcoin's fully centralized here on Earth, right? So it's just kind of nonsense. And the reason why we know that it is nonsense is because we can look at the data, right? Look at the mempool, find me a transaction that is being censored. There are none. That's why they have to talk about risks, right? And that's FUD. So in the Bitcoin mining world, there's two kinds of actors, I think. There's the ones that are competing on the merits, right? So if you, for example, if you have a new mining rig, you'll say, hey, look, it has better efficiency, better joules per terahash than the competition. We're selling it at a better price, buy our product. Or you can create FUD and say, hey, look, our product is worse, or it's the same as our competitors, but for these ideological reasons, you should use us, or they have too much market share, and so please, we're begging you for some charity here. Can you please provide us some market share too? And I think that it's fully understandable from their commercial perspective that they need to FUD the competition because they don't have a substantively better product that's actually going to make more money for the person buying it on the market, right? But as Bitcoiners, I think that it's a shame because then we're creating unnecessary, nonsense around narratives around Bitcoin. The reality is that Bitcoin mining is it's anti-fragile, and so what would happen is if we did actually have censorship, which we don't, but let's pretend that we did have censorship, then the person being censored would bid up their transaction fee in the mempool until it attracts competition to pick up the transaction to get included into a block. And that's really the most important thing, is that hash rate and block templates and pools, this is an open set, right? There's no way for the incumbents to try to keep out new competition. Contrast that with proof of stake, where it's not an open set, and the stakers can actually be able to censor others from entering the stake. So I think that we got to set aside the marketing narratives when we're actually talking about the technical merits of Bitcoin and look at the fact that Bitcoin mining is anti-fragile and that everything's pretty healthy based on what I'm seeing in the mempool, right? The actual data rather than just the FUD risks.
So the problem that Emzy is referring to, Twitter user 0xB10C has published a number of analysis of block templates. How many people have seen that analysis showing that a lot of pools are using the same block template? A handful of people. Okay, so basically a number of pools are using the same block template. One party is putting out a block template and a number of other pools are using it. Why is that happening? The reason it's happening is that if you run a pool, you need a lot of capital. Bitcoin mining processes more than $500 million every 2 weeks. Every difficulty adjustment period is 2 weeks. And that's a lot of capital. The pool is acting as a risk taker. They are buying shares and they're taking the risk on how many blocks the pool will win, how much the transaction fees are going to be, and the variance thereof. The main reason pools were invented back in the day was because variance was very high. If you can manage to mine 1 block a month, 1 month you might get a block, the next month you can't. And you might not be able to pay your bills that month. So that's why people started pooling. The primary reason is variance reduction. That is a fundamentally risk market-based problem, right? Now, who are the risk takers? Bitmain, in particular, runs Antpool, is a producer of ASICs. They know how many ASICs they produced, they know how many were sold, and they know how many were likely to be put into production. Therefore, they are one of the perfect risk takers in this market to know whether the hash rate is going to go up or down in the next period. That's why Antpool is basically backstopping other pools. The agreements between other pools that are using the block template of Antpool are private. We don't know what they are, but we can see that it's happening. And there must be some kind of private agreement between those pools and Antpool that says, we will backstop you financially if you use our block template. So that's what's going on. That's why this is happening. The role of a risk taker is very important in making sure you're profitable as a miner. In mining, years ago, we had many different kinds of mining protocols, including PPLNS, which is now used by Ocean. They kind of all died in favor of FPPS. FPPS is fixed payment per share. All miners have essentially expressed a preference to receive a fixed amount of money. And what that is to say is that they want someone else to take the risk on how many blocks they win, what the transaction fees are. They have costs to cover. They have capital expenditures. They paid for a power contract. They paid for mining hardware. And they want to be able to cover those costs and make sure they're profitable. And they can't deal with the variance. So we need risk takers in the market. What we're going to do with Braidpool is create an actual market out of risk takers. If you're using Antpool, Antpool is buying your shares. You cannot sell your shares to Foundry, and vice versa. You're mining on Foundry, you cannot sell those shares to Antpool. We're going to create a situation where we have an actual market. Your share is an actual coin on an actual blockchain that will be automatically converted to Bitcoin if you don't want to engage a risk taker, but you will have the opportunity to engage a risk taker, a market maker, who will buy your share and then take that risk for you.
Yeah. This morning I looked up the distribution of this proxy pool thing. It's Antpool with 22%, Binance Pool with 2%, Spider Pool with 3%, SEC Pool 3%, Luxor 1%, Brains 2%, BTC.com 1%, Poolin 1%, Ultimus Pool 1%. And the source is a blog post from the Bitcoin developer or XB10C. And it's interesting. He looked at the mining pools, what they actually send to their miners. So my question would be, is this actually a problem? Or should we, like in the next step, even thinking about another model where not, where you sort of get rid of pools? So is there even like a way or something? You working on something like that, or?
Well, risk-taking is not the only role that pools provide. One of them is transaction selection, right? So Ocean is doing a great job of decentralized transaction selection. In Braidpool, we are going to end up operating very similar to Ocean, and then we're going to push transaction selection to the edge. It is definitely a problem, right? Because most markets go through kind of a maturity, And as markets get mature, they develop derivatives markets, and those are futures and options. And that's where the risk takers come into the market. Bitcoin is relatively immature in this regard. We do not have hash rate markets, hash rate futures and hash rate options. We have dollar price and other fiat price options and futures, but we do not have hash rate. So if you're a miner, you need to hedge both. You need to hedge whether hash rate's going to go up and down, and you need to hedge the dollar or other fiat currency that you're paying your bills in. But so yes, it's a very big problem.
Kent, when I understood it right, you basically providing mining as a service, and you must have some front end or something where you give the miner access to their hardware. Would it be possible for you to have something where you freely choose, or would it be a path for you, even like implementing something like the Datum thing, where the miner itself chooses something? Or is that too complicated? This is like even for professional miners could be too complicated, because right as it's right now, you just need to configure some URL and some username and password, and then your miner is online, and you don't need to care about anything else. Will that ever work, that you decentralize the POC template more?
You know, I don't know is the answer to that. What I do know is right now we are currently integrated with Luxor. So you're right, we have built a front end to simplify the process, mining as a service, and we are aiming to integrate with Ocean in the relatively near future. Bob might be interested in working with you as well here in the future. You know, what we want to do is we want to give the optionality to our consumers to choose where they want to mine. Now, our consumers are specifically asking for Ocean, which is why it's high on our roadmap right now to get that integration in. And they're doing it for the reasons and these worries that we're talking about here. And I think, you know, for me, I do see it as a problem, but I see it as a problem that is being fixed, right? The incentives of Bitcoin make it such that if there's the perception that there is centralization occurring within the ecosystem, there's an opposite and equal reaction that's going to occur, because none of us want to see the Bitcoin we're holding totally centralized and at risk. So I see Ocean, I see what you're doing as an example of this as well, as that natural antidote that's coming to the market to address this perceived risk that, to Pierre's point, has not actually occurred yet, but the worry of it is enough to create this reaction. So I see this all as part of the natural process of Bitcoin's evolution to decentralize.
Yeah, I think we've been talking about this from the negative angle, like decentralization is to basically protect against potential censorship, which I don't think it is FUD, I think it is real. But Bitcoin mining has harnessed, somebody was mentioning yesterday, the human emotion of greed, right? Like you can make the most amount of money if you can convert electricity into Bitcoin. And so the whole system is designed for maximizing profit. And so the other side of this coin of decentralization, not only does it protect, you know, one entity from cutting somebody else out of the blockchain, but it also opens up a whole world of opportunities for miners to make more money through the future markets of block space. And I think block space marketplaces are going to be, it's the commodity within the commodity. And in the future, when Bitcoin is adopted at scale, and we see nation states beyond strategic reserves, this is medium of exchange, this is commerce at a global scale. Getting transactions into the base layer is going to be very, very expensive. And what do organizations do when things and commodities and products are expensive? They basically hedge it by securing space by the service providers. So miners have the potential to be block space creators for this future world that we're going to see unfold, and they'll be able to sell that block space to individuals, to corporations. But you can only sell block space if you yourself have the hash power to find a block, and you have your own Stratum server, and you're making your decisions independently to be able to compose a block template that's comprised of blocks from your local mempool, as well as potentially out-of-band transactions that are sent to you. So there's definitely two sides of the coin. There's protecting against something bad that could happen, like censorship, but also the opportunistic mindset. And I think the opportunistic angle is what's going to drive adoption more.
I'm interested in if mining right now moved more from the I want to mine, I also want to help the Bitcoin ecosystem, and I'm only looking about return of invest. I'm a big company, I'm looking for maybe next quarter, the return of next quarter. I don't care that much about how Bitcoin is surviving in the future. Maybe even sell the Bitcoin. Pierre, maybe you can tell me what you see in the Bitcoin space, if it's going more to these big companies who are not really, let's say, hardcore Bitcoiners.
Yeah, great question. So if Bitcoin mining relies on altruism and on ideology, then Bitcoin is fundamentally broken. Bitcoin mining relies on self-interest, and that's why it works. And if we look at the history of Bitcoin mining, when Bitcoin kicked off back in 2009, it was fully centralized, right? You had one guy who was mining, okay? So it was 100% hash rate by one person who was releasing binaries without the source code. All right, so Bitcoin nodes were fully centralized as well on day zero, and who held all the Bitcoin. So Bitcoin started out 100% centralized on basically throughout 2009, and it's only since then that it has gradually decentralized. And I think that Bitcoin, from all angles, mining, nodes, wallets, ownership, is more decentralized today than it ever has been, and it is continuing on that trend. So I think that it's good that there are people in Bitcoin mining who are not interested in Bitcoin and who are purely there just to make a profit. I think it proves that the system does not rely on politics, right, or ideology, and it really is anti-fragile. Now, if we look at the facts, there are a handful of publicly traded Bitcoin miners who mine Bitcoin and who sell the Bitcoin that they mine right away, right? Most of them, in the US at least, that I'm familiar with, they actually put the Bitcoin on their balance sheet and they hold it, right? So they're thinking about it kind of the treasury reserve asset approach that Michael Saylor has of, hey, we're gonna mine Bitcoin, we're gonna hold it on our balance sheet. So does that make them hardcore Bitcoiners? That they're not self-custodying for the most part because they're publicly traded, so they use third-party custodians. So there's kind of a wide range of purity tests that we can apply to everyone and say, hey, look, you're using centralized Twitter to promote your decentralized solution. You're not a real Bitcoiner, right? So I think that there's just any kind of approach we can take to the question, but I think that it's all about self-interest and profit motive. And when we look at the academic literature on Bitcoin mining, it is among all of kind of the industrial economics, all the different markets, Bitcoin mining is hands down the most competitive, right? It's the closest to perfect competition that exists. And this has been studied by academics, right? And they also like how much data is available because of the blockchain, that they can actually see what's going on. And it's a brutally competitive market. It's dog eat dog. People are going out of business. We saw Core Scientific go bankrupt, but there's also lots of private miners, lots of small miners. It's not uncommon to see the difficulty adjustment sometimes be negative, right? And we also have to look at the geographic decentralization, right? So for years, people were crying on the internet about all the mining happening in China, right? And they couldn't do anything about it because Bitcoin mining is permissionless. All they could do about it was just cry harder on the internet. And then the Chinese government banned it. And what happened? it decentralized, right? Because it's anti-fragile. It's not like the Bitcoin network collapsed, which is what these FUDsters thought would happen. And so, we saw hash rate come to the US. Now they're crying about all the hash rate in the US. So there's always going to be people who are complaining about the status quo, and they can't do anything about it because it's permissionless. All they can hope for is for the government to intervene on their behalf to ban Bitcoin mining there and to cause it to be decentralized.
Okay. Yeah, short. We're short on time.
Sure. So the question to remind everybody was, are people mining altruistically or are they mining for profit? I regard Braidpool as a project. If we cannot make it more profitable to mine on Braidpool than mining on any other pool, we have failed as a project. And I think what Ocean has demonstrated, and a lot of miners have reported, is that they've found themselves to be more profitable under Ocean than other pools. And the reason for this is that the centralized pools are extracting fees in a lot of very kind of sneaky ways that are kind of hidden. In transaction fees, in merge mining shitcoins, in a lot of things. We plan to add extra features to that, including having risk buyers, having competitive market there that will squeeze those margins to make it more profitable. There are people out there mining altruistically. People who are buying BitAxes are either mining altruistically or they're playing the lottery, but Bitcoin cannot depend on them. Fundamentally, this is a capitalist market. Everyone must make money, and we should all try and make everybody make as much money as possible.
Sadly, it seems to be we're out of time. I think the topic is even broader. We have like more things that we can talk about. Maybe we can repeat it somewhere, or maybe you find some of the panelists and talk directly to them, and maybe talk about your concerns about Bitcoin mining. So thank you for the attention.
Thank you.
We got. Yeah.